Hi everyone, good morning to all. Welcome to the new session of UN Digital class. Today we are going to discuss new subject regarding cost and management accounting. So on today's discussion we are going to discuss what is the basic difference between cost accounting and management accounting, then management accounting versus financial accounting, and what do you mean by cost center and what are the different types of cost centers. Then the last part on today's discussion regarding the classification of a cost. So listen carefully, we will discuss one by one everything. So first we are going to discuss what is the basic difference between cost accounting and management accounting. We have already discussed in our last class the concept of cost accounting and the concept of management accounting. And we know that the cost accounting is a technique for ascertainment of cost of product or services or providing any type of a service relating to particular organization, and management accounting is that part of accounting which is basically concerned with taking managerial decision based upon the information supplied by the cost accounting and financial accounting. So what is the basic difference between that two branches of accounting, which is cost accounting and management accounting, that we will discuss one by one. The first basis relating to the objectives. The basic objectives of cost accounting is to determine the cost of products or control the cost, but the management accounting basic objective is to assist the management by supplying necessary accounting information. So taking into consideration the objective point of view, the difference between cost accounting and management accounting, we can say that cost accounting is a formal mechanism for ascertainment of a cost of product or providing services, or it is basically used for controlling the cost. That is the main basic objectives. But the management accounting basic objectives is to take managerial decision for the organization based upon the information or the report supplied by the cost accounting as well as financial accounting. The second point relating to scope. In case of a cost accounting, the scope of cost accounting is not broad. It deals primarily with accept cost and cost control. But the scope of management accounting is very broad. Financial accounting, cost accounting, statistics, etc. are related to management accounting. So scope of cost accounting relating to cost accounting and management accounting, if we will discuss, we can say that the scope of cost accounting is not wide. It is only limited to ascertainment of cost and control of cost. But in case of a management accounting, the scope is very wide or vast. It covers all the aspects of cost accounting, financial accounting, different statistical tools, records, every type of information that is taken into consideration by the management accounting for taking managerial decisions. The third point relating to nature. This accounting or cost accounting system concern is both past as well as present fact and figures. That means where cost accounting is concerned, if we will take into consideration the nature point of view, cost accounting takes into consideration the past information as well as present information or the facts and figures relating to both past and present taken into consideration for ascertainment of cost. But in case of a management accounting is concerned with the transaction relating to future. That means after supplying the information by the cost accounting as well as financial accounting, management accounting is taking managerial decision, and that decision is always based upon future, as management accounting is concerned with the future course of action, so it takes a decision relating to the future. Then the second part of difference between management accounting and financial accounting. We also cover financial accounting, and we also know that financial accounting is a type of accounting or a branch of accounting which is basically concerned with the recording of a monetary transaction and events affect to the business during a particular financial year in a systematically way and provide the information or the results which shows the financial position as well as income position. So what is the basic difference between management accounting and financial accounting, that we will discuss. First point, that is objectives. Management accounting main objective is to assist the manager at all levels, that is internal users as well as external users, by providing necessary accounting information. But in case of a financial accounting, it is prepared for outsiders like shareholders, government, customers, suppliers as well as organization managers. So the first point relating to objectives. Management accounting, the basic objective is to take managerial decision, and that is for internal assessment of the organization. But financial accounting, its basic objectives is to provide information both to the internal users as well as external users. That means the government, the stakeholders, different regulatory bodies, shareholders, public, general customers, everybody, they are ascertained with the organization system, and financial accounting provides the necessary information to the different users associated with the business. The second part relating to the accounting principle. In case of a management accounting, it has no such principle for preparation and presentation of a report. Therefore, reports differ from organization to organization. But in case of a financial accounting, it is governed by general accepted accounting principle, that is GAAP. Therefore, all organizations must prepare the financial report in a same manner. So the accounting principle is not covered by management accounting. Management accounting is concerned with the rules and regulation implemented by the management. There is no such of accounting procedures or the principles, concept or convention that is not involved. But in case of a financial accounting, it is basically concerned with the general accepted accounting principle, which is covered with different types of accounting concept and a convention. And every type of a financial organization or organization, they have to cover or they have to go through the accounting principles. Unless otherwise they have to not covered with that, then in that case the organization's report is meaningless or having no value. The third point relating to reporting. In case of a management accounting, it provides information in the form of a report at a certain time interval as per the need of the management. Whenever management need any type of information or report, the report is provided, and it provides the information in the form of a generation of a different reports. But in case of a financial accounting, final report or financial reports are generally prepared at the end of a particular year or at the end of a particular financial year, and that must have to report to different stakeholders. We have to wait for a period, and when the period is completed, in that case the report must be generated. But in case of a management accounting, there is no such time interval. As and when that is needed, the report can be generated. Then the next difference between management accounting and financial accounting, that is in terms of a legal compulsion. So in case of a management accounting, it is voluntary. It is applied to increase managerial efficiency for attaining the organization objectives. But in case of a financial accounting, it is compulsory in every organization. So legal rules and regulation must have covered by different financial accounting or different organizations. Those are covered with the financial statement. For them, the legal compulsion is compulsory, but for management accounting, the legal compulsion is not compulsory, that is voluntary. It is only applied to increase the managerial efficiency. If management thinks that they will increase the managerial efficiency through their rules and regulations, then they can do. There is no such type of a compulsory legal rules and obligation. Then the next point of difference, that is performance measurement. In case of a management accounting, it measures the efficiency and performance of various departments as well as divisions. But in case of a financial accounting, it measures the overall efficiency and performance of the organization. That means financial accounting takes into consideration or measure the overall efficiency of the entire organization as a whole, but management accounting is covered with measure the efficiency and performance of each individual, each department or each division of an organization. Then the next point, that is secrecy. In case of a management accounting, secrecy of a report is compulsory because it is prepared for internal decision. As management accounting is concerned with managerial decision, that is for internal part only, so that's why the secrecy of a report is necessary and that is compulsory to follow by the management. But in case of a financial accounting, as it is covered with or it is used or involved with different types of user, both internal as well as external, so in that case financial reports are publishing to the knowledge of outsiders. Generally, the information or the report which is generated at the end of the period, that must have to be provided or that must have to be published for the general knowledge of different stakeholders involved with the organization, both internal as well as external. So they are not separately maintained in the management accounting report. Then the next point, that is span of time. In case of a management accounting, it varies from hour to hour or hour to many years. But in case of a financial accounting, it is generally preparing monthly basis or quarterly basis or half yearly basis or annual basis. That depend upon the organization. But in case of a management accounting, that is from 1 hour to many years. Then the next part of today's discussion, that is cost unit and cost center. We have to discuss that what is cost unit and what is cost center and what are the different types of cost center. So cost unit is a quantitative unit of product or service in relation to which costs are ascertained. So it is the smallest segment, or it is cost unit means the unit for cost. That means when we produce a product, we have to produce certain quantities of product relating to a particular organization for a particular period, and the total cost involved during that period for producing the number of products we have to take into consideration to ascertain the cost per unit of each product. So in that case, we take into consideration the total cost as well as the number of a unit produced. When we divide that the total cost with the number of a product produced, then we can find out the cost per unit. But cost unit, it is a unit for product or providing service relating to one organization. Then the cost center, it is a location, person or item of equipment in respect of which cost may be ascertained or related to cost unit. So cost center, it is the smallest segment of a division or a area for responsibility for which costs are ascertained or cost may be controlled. So cost center can be a location or maybe equipment or maybe group of persons where costs are involved for ascertainment as well as a control. Then we are going to discuss different types of cost center: personal cost center and impersonal cost center. Second one is operation and process cost center. The third one is production and service cost center. So we will discuss one by one. Personal cost center refers to that cost center where the cost is involved with the persons or group of persons, or where costs are ascertained relating to a cost center where there is a person or a group of persons are involved. But in case of impersonal cost center, it refers to that type of cost center where a item of equipment or machine related for producing a product or controlling the cost. Then the second one is operation cost center. It relates to that type of a cost center where cost is ascertained with the help of persons as well as machines or equipment. But in case of a process cost center where cost is ascertained when a product passes through different process, and for each process is taken into consideration for ascertainment of a cost. So in that case, that is known as a process cost center. That means a product passes through different process to become a final output, and for each process how much cost is incurred, that is relating to that process cost center. The third one is production as well as service cost center. So production cost center refers to that cost center where the product is produced with the help of persons or equipment or machines. But in case of a service cost center where the product is not produced but service is provided, that means in case of a maintenance department, that is one type of a service cost center. That means that is basically involved not producing the product, but that is basically involved for providing of any type of services relating to the organization. Then the next part, that is relating to classification of cost. Why there is a need for classification of cost? We already said that cost, it is the measurement of all expenditure. That means when a product is produced, we have to take into consideration the total cost incurred for producing a product. When a product passes through different process till the completion of its finished stage, what the cost involved, that cost is taken into consideration, and the total is known as the cost for that product or any type of a service that is provided by the organization. So we have to take into consideration different types of a cost for producing a product. So there must be need of a cost classification. And why there is a need? The first one is ascertainment of a profits periodically. So we must have to know, or every organization must have to know the profit amount, and in order to know the profits relating to a particular period, they must have to ascertain the cost for producing a product relating to that period. So we have to take into consideration, there must be cost classification. What is the amount of a direct cost or indirect cost or fixed cost, whatever the cost, that we will discuss in our next slide. So we, in order to ascertain the profit periodically, we must have to classify the cost. Second one is in budgeting and planning process. Budget, that is a predetermined estimation, or planning, that means thinking before doing. So before doing anything or before producing product, we must have to be make a plan, we have to make an estimation, we have to predetermine what the cost will have to incur for producing a product, and that cost must have to take into consideration with the actual cost which is actually incurred to know the variation, and accordingly we have to take the steps. So there must be cost classification. Then there is another need, that is controlling the cost. Every organization, they must have to be control the cost during the time of producing a product. So to control the cost, they must have to be ascertain the cost relating to different stage or different types of cost. The third one is, the fourth one is pricing policy. To produce a product, there must be involved of certain rules and regulation or procedures or methods. So for that, different pricing policies is also taken into consideration, and for that we have to take into consideration of the classification of a cost. Then the next is current application of a plans and policies. What the policies or the plans that we have incurred or made or implemented, that is must have to taken into consideration at the time of a cost classification. So there is different head of a classification of a cost. First one is classification based on element. One is material, second one is labor, third one is direct expenses, fourth one is overhead. So material means a physical commodity which is basically used or consumed in the manufacturing process to produce a finished product. The material used or the commodity, physical commodity that is consumed in the manufacturing process to produce a finished output or a product, that is known as material. Suppose for producing a table, we must have to take into consideration a material for producing a table, that is timber, and for producing a bricks, the material is relating to sand or the soil or water or everything. So what the materials required, that we have to take into consideration, and that is called as the physical commodity. The second one is labor. That means for producing a product, the persons employed for producing that product, they are called as the laborer, and the cost paid to them is called as a labor cost. Then the another one is direct expenses. A certain direct amount of expenditure incurred for producing a product which is directly or closely related, that is called as a direct expenses, and a aggregate of all indirect expenses, indirect material, indirect labor and indirect expenses, that the sum total of all is called as a overhead. The second classification is on the basis of function, that is production cost. That means the cost incurred for producing a product, that is called as a production cost, material, labor or other expenses. Second one is administration cost, the cost incurred for producing, that is relating to administrative or office overhead, that is office lighting, office rent, office manager salary, telephone bill. So which are basically relating to administrative part or administrative related expenditure. The sum total of that is called as a administration cost. The third one is selling cost, the cost incurred for selling a product, that is called as a selling cost. Then a distribution cost, that means for the cost incurred for distributing the product or providing the service, that is called as a distribution cost, which is basically involved with the advertising, marketing manager salary. So these are coming under the distribution cost. Then the finance cost, that means the amount of expenditure incurred for incurring certain involvement and producing certain benefits, that is called as a finance cost. Then research and development, in order to produce the product or in order to make the product more demand in the market, and for renovation and improvement of the product, certain amount of research and development cost incurred for a product renovation, product improvement and design. So that is called as a research and development cost. Then on the basis of a controllability, one is variable cost, second one is fixed cost, the third one is semi-variable cost. Variable cost means the cost which vary according to number of production produced. If the number of production increases, the cost may increases, and if the number of production decreases, the cost is also decreases. So that is called as a variable cost. Suppose we produce 100 unit of product, in that case the cost incurred is rupees 500. When we produced more than 100 units, suppose 200 units, in that case the cost incurred may be increased to 1000. So in case of a variable cost, the cost or the total cost increases, but the cost per unit remains same. But the fixed cost, that remain fixed at a all level of output, irrespective of increase or decrease in the volume. So whether may be 100 units or may be 200 units, the cost remains same. Suppose rent or salary of a manager, whatever may be the number of production, whether that is increased or decreased, but the rent of the room or rent of the godown or the salary of the manager remain fixed. But the semi variable, there is certain amount of cost which is partly fixed and partly variable. For example, telephone bill. In case of a telephone bill, the rental charges remain same, but the call cost or the unit we consume that vary. If we consume more number of calls, then we have to pay more amount of a cost. So partly fixed and partly variable, that is called as a semi variable cost. The next base is on the basis of a normally, that is a normal cost and a abnormal cost. Normal cost is the cost which is normally incurred for producing a product or providing services, that is material, labor or expenses. We must have to incur that, on otherwise we cannot produce the product. So that normally incurred at all level of output, that is why it is called as a normal cost. But there are certain costs which abnormally arises. In that case, there is no control from the part of management or the organization, and in that case the cost involvement is more, and that is known as abnormal cost. Then on the basis of time, the cost is divided into two parts, that is historical cost and a second one is predetermined cost. Historical cost means the cost incurred after producing a product, but after producing the total output, what the cost incurred, the sum total of all cost is called as a historical cost. But predetermined cost is the cost which is determined in advance. Instead of producing a product or before producing a product, what the cost involved for producing a product, we must have to determine it in advance, that is called as predetermined. Then on the basis of association with the product, the cost may be product cost and a period cost. Product cost is the cost which is directly related to producing a product, but in case of a period cost, the cost is relating to time. With increase or decrease or the passage of time, the cost is also increases or decreases. That's why it is called as a period cost. Then on the basis of identifiability, one is direct cost, that means the cost which is directly incurred for producing a product or providing a service. But indirect cost means the cost which is not directly involved, but that is indirectly associated for producing the product. Then on the basis of investment, one is capital cost, second one is revenue cost. Capital cost means the cost incurred or involved or contributed by the owner, or which is called as one type of a fixed expenditure that is made at a time a huge amount, but the benefit that arises out of several years, that is capital cost. But revenue cost means which generally arises in a day-to-day transaction, that is called as a revenue cost, and we take the benefit after investing that. We have to incur the cost and we have to take the benefit at a time. So there is continuous involvement of a cost as well as benefit, but in case of a capital cost, involvement is at a huge but benefit over several years. Then on the basis of decision making, there are different types of cost. Out of pocket cost, that means the cost which generally involve a huge amount of expenditure outlay, which generally arises outlay, or which is generally arises involvement of a huge amount of expenditure or generally cash outlay, that is called as a out of pocket cost. Opportunity cost, that means by incurring certain amount of involvement which we arrived the benefit by involvement or investment of that amount of cost, that is called as a opportunity cost. Imputed cost, the cost which is incurred for producing certain number of benefits, that is imputed. Marginal cost, which is a differential cost, that means the actual as well as the standard. By taking into consideration one extra unit of output, what the additional cost is incurred, that is called as a marginal cost. Then the replacement cost, that means the cost which is replaced at the current market price relating to a particular product, that is known as the replacement cost. Avoidable cost, certain costs are there which can be avoided if organization have to take proper steps. So from the management point of view, organization point of view, that is called as a avoidable cost. But unavoidable cost, certain costs are there which cannot be avoided. We have to take after several steps and precaution, the cost we cannot avoid that must have to incur, that is unavoidable. Differential cost, by increasing certain additional number of units, what the extra benefit that is obtained, that is known as differential. Then the relevant cost, which is directly related to a particular product or providing a service, that is relevant cost. And the next one is irrelevant cost, which is not directly associated with producing the product. Conversion cost, that means the cost incurred for producing a product from primary stage to the complete end product, that is known as a conversion cost. So by taking into consideration different element of cost or classification of cost, we have to classify the cost or the component of total cost, how we can arrive the total cost for producing a product. First we have to calculate the prime cost. Prime cost is the sum total of direct material plus direct labor plus direct expenses. Then after prime cost, the next one is factory cost, or which is called as work cost. That means prime cost plus factory overhead. The amount of factory overhead with prime cost gives the result of a factory cost. Then the next one is cost of production. If we will add the factory cost with office and administrative overhead, then we can find out office cost. So factory cost plus office and administrative overhead, that is office cost. Then the total cost, which is also known as cost of sales, that can be arrived by taking into consideration the office cost or the cost of production with selling and distribution overhead. So this is our complete component of total cost or calculation of a total cost. This was my today's discussion regarding to difference between cost accounting, management accounting, and cost accounting versus financial accounting versus management accounting, and relating to cost center and cost unit, different types of cost center and a different classification of cost, and finally how we arrive the total cost relating to a particular product and or providing a service. In our next class, we will discuss what is the merit and demerits of a cost accounting. Thank you all. Have a good day.